think my big takeaway, but it's been a takeaway before, is that Jay Powell is not only remarkably good at what he's doing, but remarkably frank about it. I don't have to remind you, Sarah, that it wasn't all that long ago when, if you were speaking as chairman of the Fed, you were supposed to speak in tongues or something like that. Ben Bernanke moved away from that. Janet Yellen moved away from that. And I think Jay Powell has moved this to an entirely new level of frankness. That little clip that you just showed, cross red lines, it's something I think former Fed chairs wouldn't have said. He was very comfortable saying it. And what he meant, of course, is that if these are not unprecedented times in which you do unprecedented things, what in the world does that concept mean?
Alan, in terms of the frankness, what did you make of what he said about income inequality?
That was another thing. The Fed often has gotten, and certainly happened in the financial crisis, blamed for worsening inequality. And Ben Bernanke and Janet Yellen have always said correctly, that was never our intent. But other people commenting on it said, well, if you boost the stock market, that's going to raise inequality. Jay Powell had a different take on that, and very appropriate take on it today, and he has before, which is that this horrible recession, depression, whatever you want to call it, it's a completely new animal, is bearing down hardest on the people least able to defend themselves, low-wage workers, people with practically no cushion, nothing in the bank account to fall back on. And to the extent that the Fed's actions can shorten that, let's just call it a recession, and make it less steep, it's already very steep, but less than some other outcomes, it's actually going to improve income inequality.